Okay, so let's understand the headlines. Where do we stack right now? The headline number one is that China has not seen any follow-up buying after that 1 week of close. Everyone thought that this long China comeback trade is real, and thankfully that has reversed in favor of India. So the template which was bothering the market was that money is going to move out from India and move only to China. That, in a sense, was the most cozy trade. And I would like to take some credit here as a channel. We've been flagging off that this long China trade was something which was hard in terms of sustenance and difficult in terms of extension. So China has either hit a pause button or the fall of buying after that big 25% move has got stalled. Second, let's look at where major markets are and where things are in terms of different asset classes from 22nd of September. Why are we choosing 27th of September? Well, that's the time when the geopolitical tensions in Middle East, they really spurred up. What do we have? 0.5% down for Dow, 0.25% up for Nasdaq, 1.5% down for FTSE. So the second concern was, okay, what will happen? So some were worried about China, some were worried about Middle East, and those who were not worried about A or B, they were worried about both. So even on the second front, which is that Middle East front, the concerns are now getting diluted, and global markets in a sense have regained their lost rhythm. Third talking point is that after 6 days of decline, we saw a rally yesterday. Will it sustain? Are we in for a rebound? What will bounce back? And if China is reversing, are happy days back for India? I think that is the narrative point. And fourth, if I may just add, which we will discuss, MPC, what it will do for the market mood in the near term, and are they likely to change the stance? But for a market where on Monday last week everyone was just convinced about this China comeback as the real deal, that has got challenged. Some were bothered about Middle East, that okay, what implications it will have in terms of the long-term crude trajectory. And if you're not worried about if you're not worried about Middle East, or if you're not worried about China, well, the rest of the pack was worried about both. So that is how the stack was, and those concerns have got addressed now.
Yeah, there were a lot of worries, but the Indian markets has been climbing the wall of worries. And to add to that factor, crude was on the boil earlier. We had seen it surpass at $80 to the barrel mark. It's cooled off a bit for what it's worth. It's below the mark of $78 right now. So clearly a lot of action as far as the global markets are concerned. And that's getting reciprocated back home as well as to what's happening in the Indian markets, because yesterday was the day we managed to break out of the 5-day losing streak, and finally there was some green on the screen. As far as the Indian market is concerned, you can question it whether it was a one-day wonder or whether we have made a bottom for ourselves, but that remains the key talking point in the markets right now. The good news was also that there was good amount of outperformance coming in from the broader markets, because over the last 1 week there was that massive crashes that we are seeing, cuts of 3 to 4% every day when it comes to small cap, mid cap index. That got a bit reversed. Remember, the lows from where we have managed to sort of bounce back is 24,700 thereabouts. The September low was 24,750. So from there, the market is trying to find a flow for itself. Very interesting how the FII and the retail positions have been in index futures, because over the last 7 sessions, while longs have been unwounded by FIIs to the tune of 45%, retail has actually gone ahead and added longs to the tune of around 70%. So that's the interesting picture. And I think, Nikunj, that has been the nature of the market, that FIIs have not been the kingmakers this year. It's been the retail and the DIIs. That really continues. But whether it's a bottom or not is what the street would like to know more about.
See, when we're discussing the market bottom, we'll have to rely a lot on technicals, right? And that's where you'll have to look at that where we stand in terms of the technicals. Yesterday's bounce on expected lines. What happens after that, I think, is what we need to look at. Now, how do you establish whether we have a trading bottom in place or not, and what are the technical indicators? Well, if the markets have come down because of FI selling, which it has, then what is the FI positioning? Are they likely to increase more shorts, or are they likely to cover their shorts? If the China trade is reversing, and given the fact that FIs have been on some kind of an rampage in terms of selling the market down, well, the logic to sell market further may obviously get reduced. So the first sign of recovery could really come from what FIs would do, not only in the FNO market, not only in the cash market, but in the FNO market. Second, if the market bounce is coming, what will bounce back? Will it be high beta? Will it be PSUs? Will it be good old defensives as market will continue to migrate into defensives? Let's understand that. I see the following happening. I see the retail dominated stocks taking a back seat. And I'm talking about the 2-digit stocks. They will take a back seat, they will not come back. I expect that Nifty may not do anything special, but individually, lot of stocks yesterday, either they bottomed out or they've rediscovered momentum. There is a trade coming in some of the PSU stocks. However, I think the real market in a sense would, so rather than chasing the stocks now, I guess one needs to look at news in and around earnings season. That's the time you start buying. But from a market where on Monday, Anisha, where we were discussing kitna girega, now the narrative could be kya lene ka. How much markets will fall versus what to buy, and I think that is the narrative. So I'll say it again, I don't think the retail dominated patronized stocks, the Vodafones and the Suzlons of the world, they will come back in a hurry. Second, I expect a bounce in PSUs, a trade is coming there. Third, I expect that the market, Nifty may not do anything special, but individually in and around earnings season, you need to then time yourself smartly so that you can get an extra advantage of market volatility. Buy the market on a bad day, buy in and around bad news. I think there are a lot of individual stocks where I think the bottom formation has already started because the world is looking strikingly different than what it was last week versus Monday versus Wednesday.
Okay, kya lene ka hai, and maybe we'll be discussing
Say
that
it
through
again.
the day. Am I in this great?
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.